First of all, I want to really thank you for this tremendous initiative. I think UNISDR has really taken this forward by providing and availing these guidelines. It's a first step. We have a lot of work ahead of us, but an incredibly important step. So thank you for all your efforts. I'm Maryam Gholnaraghi. I work at the Geneva Association. It's a think tank whose members are 90 CEOs of the largest global insurance and reinsurance companies, which gives us the privilege of working at that executive level in trying to advance and implement risk transfer solutions globally. I also have had the privilege of engaging with Insurance Development Forum, which, as you know, it's a consortium engaging the insurance industry, United Nations, and World Bank Group in providing practical solutions, particularly to the most vulnerable nations when it comes to expansion of insurance. So the guidelines that we developed here essentially follows to the program of Sendai framework. Of course, what I have here and what I have in the paper is a simplified version of the comprehensive approach, which includes all the elements that Sahar talked earlier in terms of risk assessment being the foundation, but then risk reduction and preventive measures, and then dealing with residual elements through risk financing and risk transfer, and then resilience building post events. In terms of insurance and risk financing and risk transfer, these are slowly coming to focus, particularly with ministers of finance. Yet when you look around the world, in all countries, high, middle, and low income, you see that there is a large protection gap across the government, businesses, and individuals when it comes to various financial solutions that help build economic resilience. So one of the efforts through the Geneva Association Insurance Development Forum, and in working with many partners, we're hoping to address that. And the first step is how can we transfer the expertise of insurance industry as leaders in risk modeling, particularly to governments. And this is definitely a first effort, joining forces. So going to the next slide, what the module provides are some of the critical considerations for when the government considers, doing the risk assessment that's needed, whether it's for sovereign risk financing or for developing scalable and sustainable risk transfer solutions. The 5 critical elements that need to be considered. First is having a clear understanding of the objectives that the government wishes to meet by designing such a program, whether it's providing stimulus for domestic insurance markets, providing cover for public emergency relief, protecting public assets, supplement budgetary measures, et cetera, et cetera. So there needs to be clarity as to what the goals are, which sets the foundation for how to go about collecting the data and doing the analysis. Furthermore, as second part, any risk transfer product should cover the appropriate risks, appropriate levels of covering that is aligned with the government's risk appetite, budget, and what it wants to insure or finance. Third element is, as it's been stressed over and over, I guess, as part of the webinar, is adequate data and technical expertise to support the process. A critical element of designing a sovereign risk financing and insurance program is the ability to price the risk and to be able to structure that risk and determine what element of it can be undertaken by the government and what should go into the market-based and capital markets in terms of modeling, in terms of provision of those products. Fourth element, which is sort of fits all the other requirements, are the need for strong and reliable primary insurance market. As you know, this is one of the biggest challenges in particularly most vulnerable nations: access to the global reinsurance capacity, regulatory awareness, adverse risk selection by the insurers due to information asymmetry, Risk of limited take-up, a lot of times, for example, for the national insurance programs, penetration is quite low because businesses and individuals look to post-disaster financing that the government avails, and that disincentivizes expansion of insurance in these markets. And creation of moral hazards is a very important foundation in terms of, insurance programs that are developed should really incentivize the behavior to reduce or prevent risks. And when those that are taking up insurance think that by taking up insurance, they've covered all grounds, that is the moral hazard. So essentially, the insurance programs really need to incentivize that change in behavior. The fifth element is understanding the linkages between frequency of payments, the limits of cover. A lot of times what happens when it comes to sovereign risk financing and risk transfer programs is the insured does not really understand what is being covered, and sort of the expectations after an event happens are not met. So that awareness upfront is absolutely foundation to the success of the program. Going to the next slide, a lot of the elements in this slide have been already covered, so I'm not going to spend much time, but I refer you to the module. Essentially, the module emphasizes that sovereign risk financing and insurance programs can be instrumental in protecting populations and economic risk associated with falling infrastructure and the economy. We've looked, referenced what probabilistic catastrophe models are. As you know, and something that I want to stress, is these models emerge out of the insurance reinsurance industry from 1980s and 1990s. And one thing to keep in mind is currently through the Geneva Association Insurance Development Forum and working with a number of partners, we are working to really advance these methodologies to include a number of factors that current models don't include. So look out for some of those developments. And I think that's particularly important for the governments when it comes to looking at risks of critical infrastructure and economy. An important question in risk assessment is to define the goals of risk assessment and who can and who should do the risk assessment. As again, it's been stressed, it's a very complex process. It requires extensive expertise, not just in doing the analysis, but interpretation of the results. One of the issues that we've confronted working with governments is they always ask which model to use. And as you see from the practices in the industry, it is best to look at a variety of models to achieve a better understanding. No model is perfect. Models have extreme amount of uncertainty associated with them. So depending on the application and depending on the refinement of the analysis, it's good to not just rely on one model and look at a variety of models. There was also a mention of parametric options. These are particularly considered when exposure and vulnerability data is lacking. And as you've seen, these have served in a number of countries and regions providing these kind of products to governments and individuals. Now, just a couple of more slides. Development of a successful risk financing and transfer programs requires collaboration among multiple stakeholders. One of the motivations for Geneva Association to join forces with IDF to provide this module for UNISDR was to try to reach some kind of a coherent methodology that can be utilized by anyone that approaches governments or when a government approaches anyone to get guidance in terms of, what do I need to do to develop a risk transfer or risk financing programs. So I hope that, this module will serve that. And one of the things we stress is achieving this kind of a risk assessment requires cooperation with a variety of stakeholders ranging from national operational services and data providers in the country to various government and non-governmental agencies that collect and maintain sectoral data. We strongly support the comments by GFDRR in terms of development of standardized national platforms, which can be invested once but utilized many times for development of such capacities. Cooperation between and across government agencies is absolutely critical for buy-in. A lot of times the insurance programs target issues that are more localized yet supported by the national government, so that coordination across national to local governments when it comes to the risk analysis and design of these programs is absolutely fundamental. Domestic and international private insurance industry brings a variety of benefits, from extensive risk modeling and actuarial expertise all the way to innovation in product and service development. So we also urge through this module to the government to build linkages to the market-based insurance industry. And then, of course, the governments may be calling upon NGOs and other domestic and international experts, and we've named a few that have been really very active in supporting these initiatives. In the module, we've provided a number of innovative programs that have emerged over the last 10 to 15 years. I'm not going to go into the details of that. In parallel to that, we also have published numerous papers on the details of some of these schemes. A number of them are parametric, as I said, because of lack of vulnerability and exposure data, but I think these examples serve good examples for governments to look into. Yet no one model fits all, and every country really needs to look at their own needs and requirements and specific objectives as to what they wish to achieve.
Sorry to interrupt, just to give you a heads up, you have reached your time, so please.
I have, this is my last slide. Thank you, Saf. And as the last slide, I like to share, we've shared a checklist for protection. So the checklist provides steps that a government needs to take for carrying out the risk assessment that's needed for protection of government budgets, as well as for protection of individuals. And if you go to my last slide, we have a number of resources to further support these guidelines that you can obtain on the Geneva Association's website, along with a number of resources and references. Thank you very much for this opportunity.